The pullback at the end of trading today was, well, something ominous or just a pause that will refresh. Let's bring in the man who tore up YouTube with his prescient calls on the stock market. He even appeared on this show when the Dow hit 7,500 and warned of more losses. With the Dow now on track for its best July in 70 years, that would be since 1939, is the perma bear ready to come out of hibernation? Let's play bull market or BS with Peter Schiff, president of Euro Pacific Capital. He's on the fast line. Where do you stand today, Peter?
Well, I still think we're in a bear market. I mean, I think the bear market's going to last for a long time. We're clearly in a bear market rally.
What is the worst-case scenario for our markets, then?
Our markets are going lower. This is not just a financial crisis. This is an economic collapse. Our entire phony economy is collapsing around us. There's nothing the government can do to stop it. They should get out of the way and let it happen.
John Brown, senior market strategist with Euro Pacific Capital. Great to see you again, John, because you've made some very interesting comments as of late.
Yeah, it's one of several bear markets on the way to a Dow of about 1,000, in my opinion. And I think it's for four fundamental reasons. First of all, consumer shock. Secondly, defaults are rising. Thirdly, there's a spread of socialism even into pay packets on Wall Street. Quite disgraceful and ruining Wall Street. Going to force it abroad.
So, Julie, I know you've got some fun facts about what happened the last time we saw the Dow hit a new peak.
Yeah, and how long it has taken. So it has been 172 days since the Dow hit 17,000. That was back on July 3rd. And, you know, as it gets higher and higher on a percentage basis, it's easier and easier to kind of hit the next milestone. But this is only the fifth fastest time that we have seen it go from one round number to the next round number. In terms of what has taken us there during that period of time, Home Depot, United Health, Nike, Visa, Intel are the top 5 performers since July 3rd in the Dow Jones Industrial Average. And whenever we hit these milestones, there's sort of some soul searching. How important is it really when you see, say, the S&P at 2,000 or the Dow at 18,000 or 17,000 or 16,000? And the consensus seems to be among investors is that it's psychologically important, and it tells us something important about sentiment among investors, both retail and institutional, but especially because the Dow is price weighted, that it is less sort of.
And it's not actually that broad of a rally if you look at
But
it.
it
Intel
could also
up 50%.
be a panicked game of catch-up. Remember where we are in the year. We're at year-end. So many investors shut their books down December 1st, December 15th, right. And as the market rallied, now they're panicked. Especially if you are a hedge fund manager, you do not want to underperform the indices. Because come January, people like us bang on the table and say, why would you pay 2 and 20 when you could just invest in a Vanguard index? So right now, they race to catch up, and all it does is push up the market.
So there actually is something technically real about the Santa Claus rally. It's
Without
fund
a
managers
doubt.
trying to meet their targets.
Without a doubt.
Probably too little too late for most of them, given what we know about their performance for this year.
But of course they're going to race. And then there's other people. We're speaking to Jeremy Siegel in just 20 minutes. He's calling for the Dow to hit 20,000 or even higher. Yesterday I spoke to Nouriel Roubini, who said we should pour some cool water on U.S. equities.